We have a number of major economic developments to watch out for this week, from the U.S. Fed's rate freeze and slipping Korean won against strong U.S. dollar to Korea's slumping exports that fell for the fifth consecutive month. While the strong U.S. dollar trend is expected to continue, we go in depth on the factors that are affecting the Korean economy now. For that, Dr. Jun-sok, professor of economics at the Catholic University of Korea, now joins us in the studio. Thank you for coming in today.
Happy to be here.
Let's start off with the U.S. Fed's decision to keep its interest rates steady. Fed Chairman Jerome Powell has described the current low inflation as transitory and not persistent. Does this mean that he's not considering a rate cut anytime soon?
Well, he has given a lot of indications that he is not planning to change the rates this year. And I think that has made a lot of Wall Street people a bit disappointed, because they were hoping that the Fed will reduce the rate at least once this year, which will stimulate the stock market. But the Fed doesn't operate to stimulate the stock market. It exists to try to take care of the real economy. Right now, the U.S. economy is doing better than what people thought. A lot of people expected the first quarter growth rate to be around 2.3%, but U.S. outperformed that by 0.9%. It came in at 3.2%, which was almost beyond everyone's expectations. And the inflation is holding at a very low rate. The CPI inflation is 1.9%. The core inflation is 2% over the last 12 months. This is one of the reasons why President Trump is asking the Fed to lower the rates. But the Chairman Powell apparently thinks that this is a temporary event and the inflation may rise in the near future, so he's holding the interest rate for now. So I think but I think what has changed is that there's still a lot of variables which says that the U.S. might go into a slowdown or even a recession later this year or next year. But at least for the first quarter, the numbers have come in stronger than what everybody thought, and inflation has come lower than what everybody thought. So I think the Fed is now going to sit back and observe to see which of these variables are going to come to fruition, whether it'll be a slowdown or whether the growth will continue as it did last year.
So the U.S. economy is doing better than many expected, but still the possibility of a depression lingers.
Recession, possibility of at least a slowdown is still in the picture. Recession is still a possibility, but the first quarter numbers seem to reinforce the fact that the U.S. economy is stronger than expected.
Bank of Korea Governor Lee Ju-yeol, after the rate freeze, said that the decision goes in line with market expectations. What effect would the rate freeze have on the Korean economy?
Well, it makes things a bit more stable. We weren't sure whether the Fed will reduce the rates or even raise the rates at the end of last year, because there were so many conflicting signals. But now the Fed seems to be saying that unless there's a major change, the interest rate will stay where it is. That means the Bank of Korea doesn't really have to think about what will happen in the United States. The Bank of Korea is in a bit of a nervous situation right now because Korean policy rate is lower than U.S. policy rate. It doesn't want to particularly worsen this interest rate reversal if it can help it. And the fact that U.S. will not change the interest rate means that BOK can look forward to making its decision in a more stable environment.
Now to the currency trend. Strong U.S. dollar continues on the back of America's robust growth. While most other currencies weakened against the dollar, the Korean won appears to have suffered the most decline against the greenback. It actually fell by 2.82% compared to a month ago. Why is the Korean won performing especially poorly against the U.S. dollar?
Okay, I think it's basically a fact of double surprise. What I mean by that is U.S. is doing better than expected. Korea is, in a sense, doing worse than expected. The Korean job creation numbers, the Korean growth figures have come in at a lower end of the expectations, or even a bit of a surprise on the lower end of the scale. So that I think people are readjusting their expectations. That's partially what has to do with it. I think also the problem is we haven't really seen that much of an exchange rate differences in the last 3 months of this year. The monthly change for the Korean won was 0.3% in January, minus 0.8% in February, minus 1.7% in March. So it has been slightly weakening over time, but at the end of last year, the last 3 months of last year, Korean won actually strengthened quite a bit. It strengthened by 6.1% in October, 4.5% in November, and 4.1% in December. So in a sense, perhaps it went up too much. It strengthened too much at the end of last year, so it's also readjusting a bit. So a bit of a readjustment plus surprise on surprise on the U.S. side and the Korean side.
But still, by the value, the Korean won fell about 31 on month. How big of a decline is that against the U.S. dollar in 1 month?
Okay, well, that's about 2.8%, I believe. But even then, as I mentioned before, compared to the first 3 months of 2019, that's a major change, especially if it takes place in 1 month. But if we compare that to the last 3 months of last year, it's not that big a change at all. And usually you have a lot of fluctuations with the exchange rate. So if this is sort of an unusual change, that it goes with the negative change in next month and so on, it's not going to make too much of a difference. Exchange rates fluctuate 2, 3, 4% all the time over the month. But if this is a start of a trend where it consistently loses value by 2 or 3% a year, then we might have to worry a bit. But so far, we haven't seen whether it'll be a part of a trend. All we've seen is 1 month. So right now, it's worth observing, but it may not be worth worrying about.
So we'll have to wait and see more on that. BOK Governor Lee has said that we will have to wait and see, exactly as you've mentioned, but that we also haven't reached a level where we need to be concerned about fundamentals. What's your forecast on the strong U.S. dollar trend? Do you expect it to continue for quite some time?
Well, I think this is partially because the U.S. growth numbers have been a lot better than what people expected. People have expected about 2.3% annualized growth for the first quarter, but it overshot that by 0.9%, which is, in a sense, huge. So I think there's a lot of re-examination going on. But there's 2 problems. One is this a part of a real trend, or is it just an illusion? Some analysts are pointing out that a lot of these changes occurred because imports in the United States went down and inventory went up. That means that this trend may not last. On the other hand, it was indeed quite a bit of a surprise. It was a big surprise. So I think people are going to take a wait-and-see attitude. If the second quarter numbers come in on the optimistic side as well, then I think U.S. dollar strengthening will definitely continue. So if we see the retail sales numbers, job creation numbers continue to be strong in April and May, we'll continue to see the U.S. dollar strengthening. But if things falter, as I said before, there's some signals which are conflicting signals. Some are saying that U.S. economy is heading for a slowdown. If those variables come to the fore, then U.S. dollar will start to weaken, but it's just basically too soon to tell. What we can say is that compared to the strengthening of the won that we had at the end of the last year, this doesn't really hurt us very much.
Now, it goes without saying that currency rate and exports are closely linked. And Korea is seeing sluggish exports for the 5th consecutive month on weak demand of semiconductors. When do you expect Korea's exports to rebound?
Okay, I think the rebound is going to be very difficult. The government has emphasized that if we exclude semiconductors, the exports actually went up slightly this month or last month. But basically, a lot of the major export items for Korea has been going down. Semiconductors, the volume of semiconductor exports has actually risen, but because the price fell so much, the overall exports has fallen. Some of the major Korean export items like displays and smartphones, the exports are down. We have some optimistic news concerning automobiles. Automobiles for Korean automobile exports have been a bit interesting because over the last 2 years, the global automobile industry sales have been recovering a bit, but Korean exports have been going down because Korean companies were not exporting the type of automobiles that the global consumers wanted, like the large SUVs or environmentally friendly cars. But now, during this year, the global automobile market seems to be faltering a bit, but Korean exports are actually going up. And the reason for that seems to be because we've finally gotten around to exporting models that consumers want. We've been exporting a lot of SUVs, environmentally friendly cars, so Korean exports and automobiles, which have been very worrying in the last 2 years, actually are doing very well this year. So that's a bit of a good news among the bad news. But still, because of the large percentage that semiconductors take in Korea's total exports, we won't see any real recovery until the price of semiconductors goes up. But in order for it to do that, there first has to be a global recovery, which is a bit questionable at the moment. The U.S. is doing better than expected. The Eurozone and China is also doing slightly better than expected. But still, there's a lot of signals that global economy is going to be in a slowdown. We need a recovery of global economy overall. And we also probably need something like a killer app. One of the reasons why Korean semiconductor exports did very well in the last 2 years is that after 2015 and 2016, when we had reduction in trade, things picked up in 2017, and companies like Amazon made major investments in server facilities. So in a sense, the last 2 years were unusually good years rather than normal years. And we may be heading back to normal now, but unless there's sort of a killer app that induces these companies to invest even more in IT facilities, I'm not sure if the demand will come back. IC Insight estimated that this year the global semiconductor market will fall by 7%, not necessarily because things are bad, but because all the major new investment is about finished.
Amid the slumping exports, the Korean government and Samsung alike have vowed to foster non-memory chip industry as the next export growth engine for Korea. Samsung has in fact said it plans to invest 133 trillion won to boost the non-memory chip business. How do you assess the growth potential and the value of this non-memory chip industry?
Okay, well, we've been saying that we should go into these non-memory chip industries for the last 10, 15 years. And the reason for that is when I talked with semiconductor engineers, they were saying that memory chips, well, they are high-tech, but they're not the highest of high-tech. You basically have to fit in as many circuits in a limited space as possible. And as you fit in more and more circuits, it gets more and more difficult. And there's apparently a theoretical physics result saying that you're eventually going to reach the end. You cannot fit in any more circuits because, well, you can only make the circuits so small, and you're going to have problems with the heat generated and the resistance that's generated by the electricity going through. So you have a limit to how much you can improve the memory chips, and we may be getting very close to it. On the other hand, as Korea is reaching that limit, other countries are chasing Korea, so eventually they'll catch up. In order to move to the next stage, Korea has to go beyond memory chips. Memory chips, because they're relatively easy to make, are treated more like commodities rather than oligopolistic, monopolistic technology goods like CPUs made by Intel or graphics chips by NVIDIA. So we have to move into a more higher value-added, oligopolistic products like those. And system chips are basically chips that have particular specialized programs inside it. And that might be a way to go for Korea to get into a more higher value-added, more specialized chips, which has more global monopoly or oligopolistic, higher value-added profitability. Semiconductors. Problem, though, is that, as I mentioned, specialists have been saying that we should go into that area for the last 15 years. Korea has not really managed to do that, partially because we were earning so much money from memory chips to begin with, and also because there's a somewhat lack of scientific talent, and we still have to work out how we can move into that sector, how we can get a lot of talented people into these sectors, or how we can attract a lot of these scientists into this sector, or at least try to get foreign scientists to get interested in this sector in Korea. And that's going to be, I think, a very tough job.
Well, I'm learning every day, too. Thank you for the analysis, Dr. Yang.
Thank you.
And that does it for this edition of News in Depth from all of us here at Arirang. Thank you for watching, and I hope to see you right back here, same time tomorrow.